Hello, this is Dean Malone with ComstFX. Hope you're doing well today and again some good trades. I want to take a quick moment and talk about the euro dollar. We've seen the euro dollar with no news in the marketplace, no Greek deal done. It's been tightening down literally into a sideways range. It's very difficult to trade that. So I'm going to give some suggestions here as far as trading a sideways range. What I like to do is look at my 15-minute chart as an active trader and just draw out the trend lines. So if I draw across the lows, I draw across the highs. If you're a scalper or active aggressive type trader, then you're going to be looking for a break of the trend line. You want to get a close below and then some continuation. And you're only looking for about 10 pips or so, maybe a little bit more. You're just looking for a possible move back down to these lows right back in here, or if it breaks above here, look for the highs. Now, if you're more the longer term, maybe conservative swing type trader, my suggestion is don't mess with a lot of this inside scalping business. Just look at the bigger picture. Take your average highs, which is going to put it about 29.80 on the high side. Take your average lows, which is going to put it somewhere right around that 29.45. Now, what I mean by that is you take 2 or 3 highs, 2 or 3 lows. That's going to be your average high, your average low. So as a conservative swing position type trader, you're not really looking to get inside of this 35 pip range. You're looking for a break to the upside. Now, a few things I want to point out to you. There are barrier options and offers sitting at the 130 level, and with an expected grease bailout to still come through, there's still some risk appetite in the marketplace to see a possible push up to the 130 area. Mr. Market likes to take out barrier options, so since there's one up here, wouldn't surprise me if we get this push up. Fundamentally speaking, though, there's no real reason for the euro dollar to be up here. The euro dollar really should be down around 125 to 126. That's where the real value of the euro is, but since we have a lot of risk appetite and a good optimistic feel that things are going to continue progressing in the eurozone, a lot of this kicking the worn can down the road, well, more of that could see a push to the upside. So if you're that longer term trader, I would look for the break potentially of 29.80. I'll give you some additional levels to consider if it breaks through the 130 level. Now below here at 29.45, 29.50, there are bids in the market to bid it back up. So if you're looking for a break to the downside, again, be cautious of buyers sitting right down here to bid it back up. There are more bids in the marketplace down around 129.20 area. Again, if you're the scalper, the active aggressive, you can play the break below this trend line down to this trend line. You can trade the break above this trend line to this trend line. And if the market can't get above 29.80, then you'll fade it. And if you'll fade it back down, you already have levels laid out to where the potential for the market to go. So if you're a scalper, you could scalp it from 29.80 back down to this level, which puts it around 29.70. Then it's going to push down to this trend line, bounce on that, and then potentially on down to this level. That's how you would play it as a scalper, trend line to trend line to trend line. Now let me show you something. Whenever you see a sideways pattern, go out to the larger picture. I like to go out to the 4-hour chart. That's my big chart for the day. And if you can see, we've had this nice run up in the euro dollar, and from the lows we had back in November, you've seen a move up 1, 2, 3 moves up, and there's a very strong move right here. This was Black Friday here after the Thanksgiving Day holiday. A strong move up, and now we've gone in this little range with no economic events in the marketplace. And count the number of bars here. If you'll notice that there's 1, 2, 3, 4, 5, 6, 7, 8, and a pullback, 9, 10, 11, 12, 13, 14, 15, and we've kind of gone flat. Usually what I've seen is when you get 5 to 8 or get around that 13 number, start looking for the market to retrace. Now there is the possibility that some are expecting the market to potentially push up, while others in the marketplace are looking for a fall back down. And let me show you why. It has something to do with the fib levels. If I run from that fib down to, or that high, down to that low right there, you can see based on our fib levels that we're right now between a 78.6 and an 88.6. This is a great retracement area. Market can't seem to push any higher or close any higher, should I say. We look for the market to fall back down. As a matter of fact, there are traders in the marketplace trading off of this 88.6 or the 78.6 right now, looking for a move back down. Furthermore, if you push this up to the high that we had back in October, we're sitting at a 618 level. This is a 1, 2, 3 down pattern. Now just be aware though that in the algorithmic world, the algorithms know the levels we're at. And oftentimes what we'll see happening is the market makers and institutions push the market just a bit more to try to stop hunt some of these short traders, either shorting from the 618 or shorting from the 88.6 or 78.6. So I wouldn't be surprised if we get a pin high up to 30, the 130 level. There's a barrier option up there, and Mr. Market likes to go knock out barrier options. So there's a possibility we come up, we hit the 130, maybe even push up to 130.20 area, and then the fall back down. Where to? There's an expectancy in the market to see 129 again, possibly 128.80, 128.75, and test those areas. If those areas give, then we see the push on back down to 128, then 127 high, like 127.75 area. I'm not sure if we'll see it drop any lower than that this week. However, we do have month-end fix where a lot of institutions around the world, they will rebalance their portfolios back towards a benchmark. So they may come out of their European spot holdings and roll into maybe some European options or vice versa, or do some money swaps with other currencies so they can move back to their or somewhere close to their benchmark. And then we'll see a resumption back into the euro dollar if the risk appetite lingers past this week. So where does the euro dollar square out for the year? My thinking is there's a possibility with this high point here and this low point here, we could see a squaring back around that 128 to 127 area. Somewhere right in here would be a possible squaring. If the true value of the euro right now sits around 126, there's a possibility it may try to end up a little high. Now, that's given if the risk appetite stays in the marketplace. If we get a risk off, things aren't going the way some are expecting it to go for the ECB and for the Eurozone leaders who are considering a 70% haircut on Greek debt, then there's a possibility that we get a landslide back down towards this 126.60, 126.50 area, and possibly even lower if we get this sudden drastic push towards a risk-off scenario. Some bad stuff will probably have to happen in order for that to take place, but we'll see what takes place. Well, folks, this is my thoughts going into trading a sideways market. I've talked about if you're the scalper, the active aggressive, you can play trend line to trend line. If you're more the position trader, swing trader, conservative type trader, just look at the bigger range here and play the range break up to about 130. If 130 holds, look for the 130.35 or potentially the 130.80. If we drop back below 29.45, just be aware that about every 20 to 25 pips down, there are bids in the marketplace to buy it back up given the current risk on appetite in the marketplace. Well, folks, this is Dean Malone with Compass FX. Hope some of the information I've shared with you in this video will help you in trading the euro dollar this week. Y'all make it a great day. Get some good trades. I'll talk to you next time. Bye-bye.